our previous webinars. We will continue forward with the technicals, basic technicals, and your demand and supply theories, everything. So we'll start. Let me share my screen. Is it visible?
Yes, Akash.
Yes, Akash.
Okay, sure. I'll just move forward. So I'll start off with an example, whatever I was talking just right now. It is not that I do not believe in fundamentals. I definitely believe in fundamentals, which is the backbone of everything. And in fact, I am also a SEBI registered research analyst in fundamentals itself. So it is important, but we need to know how to club everything. So if you see here, let me just zoom in so that you can see everything. So this is a chart as we were discussing in the last webinar, and you can see here CNX IT. So this is Nifty IT index. IT index means all the major IT companies constitute this index, and whatever price you are seeing here, 30,950, this is the price of this index. So you can turn this as a normal number also. Forget about the price. You can say that IT industry is trading at a number 30,950. So when you go into much details, you will see that the major weighted components of IT industry is TCS is almost 20 to 25% weightage. Tech Mahindra is another, say, I think 15 to 20% weightage. Then there is HCL Tech. There is LTSS, L&T's vertical for this IT company, for this IT sector. So these four, and Infosys, how could I forget? Infy is 20%. So suppose in IT industry, there are 100 companies which are listed. Each company is having its own weightage in the industry. Some are heavyweight, some are mediocre, some are negligible. So how is this weightage decided? It is totally decided based on the market capitalization. I will write it as MCAP, market capitalization. So what is market capitalization? Say the share price is 100 rupees per share of any stock, and number of shares that are eligible for trading is 50 shares. So what is the valuation based on the share price and number of shares? 50 into 100, you say 5,000 rupees. So the market capitalization of this company is 5,000 rupees, which is based on the number of shares that can be traded and the price of the share. This is market capitalization, and this is directly related to fundamentals also. What is the EBITDA of the company? What is the profit after tax, profit before tax? Everything is related. There are formulas. We do not need to go deep into that. So based on market cap, TCS, Infosys, Tech Mahindra, and HCL Tech, these four companies, they are the major contributors of this IT industry. So the nature of movement of the price of these four stocks are enough to determine the IT industry's direction, where this IT industry will go. So say if there are 100 IT companies, 96 companies are down, not performing good, but only these four heavyweight companies are up: TCS, HCL Tech, Infosys, and LTSS or HCL Tech. Then also the industry will be up because their weightage is more. So that is why you see here there is one word written DDZ. This is a abbreviated form. D means demand, and DZ is something which we use for technical terms. You can simply understand when the price is coming from this area, you can say the price is going to rise. And this I had marked in March, April, May itself. You can say 2-3 months back itself. And when price was going there, I was pretty sure 90% probability was that price will shoot up and it will go till this much before halting. So there is more rally to come in IT industry. So whatever might be the news, I do not pay any attention to that. because I know based on my charts, there still are 10% to 20% more rally left in IT industry. So this is how we align technicals with fundamentals, but later on. So the today's topic of discussion is it is pretty much related to entry and exit. What we were discussing, that how do we know when is the good time to enter or exit. So I will talk something about the psychology of the traders, the buyers and the sellers. Before that, I will discuss something about trend. So I hope many people have heard this name, what is a trend, and many people already know how to identify a trend. So there are two words in market, rally and another word is trend. What is the difference between these rally and trend? A rally means a very explosive momentum of price. Say price shot up from 100 to 200 in very less time without any correction. Without any correction means there was no dip in the price. From 100 it kept on increasing, it went to 200 in one go. That is called a rally. And what is a trend? A trend is something which is more stable, which is less volatile, and slowly and steadily the price goes up. From 100 it will go up to say 150, again it will come down to 120, again it will go to 170, again it will come down to say 130, again it will go to 200. So this slow and steady movement is called a trend. So a trend lasts for a longer duration, and a rally is a very momentarily movement. So between the trends we can see short rallies also. Within the trends we can see short rallies, but for a longer period of time our major concern is the trend. And in stock market we always say trend is our friend. We should never trade against the trend. So how do we identify the trend? For this there are few very simple points. Please listen to it very carefully. If you have any doubts, stop me wherever you are having doubts and just ask me. When we are into technicals, everything is visualization. How you visualize anything, how you make that pattern in your mind, a picture in your mind, that is everything in technical. That's it. So there are three types of trend: uptrend, downtrend, and sideways. So these three you can say are the market cycles. What do you mean by market cycles? These three repeat itself over and over again, repetitive in nature. And why are they repetitive in nature? Due to us, due to the thinking of the psychology of the traders itself. So suppose you say someone has bought an equity or a mutual fund at 50 rupees, and after a duration of say 2 or 3 months it has gone to 70 rupees. So you are in 20 rupees profit. What is the percentage? If you calculate, if 20 rupees rise is there, it is near about 30% rise. From 50 to 70, 30 to 35% rise. So think simply, suppose in 1 month you are getting a benefit of 30 to 35% on your investment. Will you still be there? Most of the people won't be there. They will say that in fixed deposit we get 7.5% in 1 year. Here in 1 month itself I am getting 30 to 35%. So why should I wait? The moment I get 30 to 35%, I will simply exit. I will not be there. Right. So due to the buying and selling, again buying and selling, due to this nature of us only, these trends are decided. So for a small recap, what we did in our previous webinar, we discussed about the candles. We discussed about these candles, red candles, green candles, everything. Today we'll do something different, and then again in the next webinar we will again get back to candles, so that we do not lose interest. So simply if I say, an uptrend will look like this. There is no rocket science in these things. Simple diagrams and simple visualizations. That's it. A downtrend will look like this. And if the market is sideways, neither up or down, it will look something like this. So very easy to visualize this kind of pattern, these kind of patterns. If I go to the chart, say any chart, this is for sale, Steel Authority of India. And if I go to this, say monthly chart here, let me zoom it. So simply if I have to see from my naked eyes, you see here, I can simply see an uptrend here. Simple as that. You do not have to be very precise. Precision is not required. Only what is required is your eyes. You need to visualize. You see here, this is my downtrend. This is my sideways. This part is my sideways. If you see here, this is my sideways part. So there was a downtrend, there was a sideways part, and again there is an uptrend. So if you see in this uptrend, what I was telling previously also, up move, this up move can be called a rally because there is one-way movement straight up. Then somewhat you can say a consolidation of the sideways and then again an up move. So ultimately this picture is forming. There are short rallies between this. If you see a down move, you can see a down move here also. So this is how we identify the trends, and based on these trends there is this concept that how the market decide the trends is, after an uptrend, market should never change its trend directly to a downtrend. This should never happen. This happens. I am not denying that this does not happen, but for us this is not the ideal scenario. What we want is that after an uptrend there should be a sideways trend, there should be an uptrend, there should be a sideways trend, and then again the trend should change. So this can be of two types. Either it can take form like this, up, side, and then down, or it can take form something like this, up, side, and again up. It is not mandatory that after sideways it will go the opposite. No. But after every trend change, there has to be a sideways momentum between that. If you want to relate this, you can simply relate if you are running a 1 kilometer race, or if you want to simply walk for 1 kilometer, you walk 300 meters very fast. And then after that, for 100 meters, you take your breath, you slow down your speed. And then again, either you say that, okay, I give up, I cannot walk anymore, you go down, or you continue, increase your speed. Simply, you can relate to this logic. Similarly, the market works here also. If you want to see few more trends, you can name any stock, say whatever, say ICICI Bank, whatever is coming in my mind, I'll just open it. So if you see ICICI Bank, if I go to any chart, weekly, monthly, daily, whatever it is, this concept is applicable in all time frames. Even in 1 minute chart also, you will find the same. You see, you can see a sideways market here. You can see a big rally downside. This is a rally. This is not a trend. This one is a rally because trend is something like this. But here you can say one-way movement. So this is a one-way movement. There was a sideways, and then you see your uptrend. You can see an uptrend like this. So people who want to invest in mutual funds or in equity for say 6 months, 1 year, 2 year, 3 year, this same logic applies. But if you use the charts, I am using this weekly chart, you need to use this yearly or half yearly chart because you want to capture long trends. So suppose I say half yearly, this is half yearly. So each and every candle here is of 6 months. This candle is 6 months. This candle is 6 months. Every candle is 6 month duration. Even if you try to spot a trend here, you see, you will find a very nice trend here. You can see it's still in uptrend. So if we are able to understand the trends and its characteristics, we do not need any fundamental, we do not need any news, nothing. Simply visualizing and seeing the chart, I can say, okay, if today I invest, I know if this trend has to continue, what is the criteria, and if the trend is not going to continue, when should I exit? Now I will come to bit more details. Suppose this is an uptrend, and these lines are nothing, these are representatives of price itself. Price is going up, I'm drawing the line up. Price is going down, I'm drawing the line down. Fine. So what happens in an uptrend is that, say this is a stock, any stock, price is say 100 rupees. From 100 it goes up to 120. Again it comes down to say 110. These are random numbers, I'm just writing. So 150, 140, 170, 155, and then 200. So what we can see, if I try to abbreviate these positions, say this is my L1. L1 means the lowest point. I will denote L means lowest point, and I will denote H with highest point. What is this highest and lowest point? The price. These are nothing but price. So from L1, price rose to H1. Again it came down. I want to name this as L2. It went up to H2, came down to L3, H3, L4, and likewise. So what we see, what is the characteristic? First observable characteristics in an uptrend, whenever the price reaches a height, it retraces itself. What do you say? Retrace. You can say it as retrace. You can say it as correction. So after retracing, it again goes up. So 2 points are here. Please listen very carefully. When it retraces, it does not break the previous low, which means L2 is still higher than L1. This point is not broken. It retraces before reaching this point itself. And what is broken? This high is broken. Price shoots up and goes more higher than the previous one. This H2 is more. Again from H2, when price comes to L3, this L2 is not broken. Somewhat it came down, and before breaching L2, it went up and again broke H2. So what we say? We say higher, sorry for my handwriting, higher highs are formed in an uptrend. Price keeps on making new highs, and higher lows. The lows are also getting higher. Price is not breaching this point. Now when I go to a downtrend, it is something like this. Now if I try to write the price, say this is 100. This is my H1. Price came down to say 90, L1. Price rose to 105, H2. So when it rose, it did not went above this. It came back and broke this L1. And now it has come down to 80.
95.
Yeah, you can say 95, no, not 95, below 90. You can say 85 or 80. Again, if it goes up, so what is the characteristics of downtrend? You can say lower highs. Highs are getting low and lower lows. The lows are getting also low. This is the characteristics of downtrend. And what happens in sideways? Something like this. No fixed pattern. Everything is stuck in a rectangle, you can say. Something like this. So Up till this much, anyone has any questions, any doubts, anything you want to add, then only I will proceed further. Is this much of information enough to digest as of now? Just type in yes or open your mic and tell yes, then I can proceed further.
Yes, Akash.
Fine. Okay.
Akash, I just want to add one point.
Mhm.
So if any one of you, like I see Abhi Nair and Adi as new, sorry if I don't remember you from the previous sessions. Neha just joined. So if you are thinking you are joining in the middle, okay, please go and visit the YouTube channel. I'll share the link in the group and watch the previous sessions. This thing will make clear for you the candlesticks and all topics. Okay, just a reminder. Please, Akash, continue.
Yeah, sure. So yeah, so moving on. Suppose I am an investor, or I want to do a long-term investing mutual fund, 6 months, 5 months, 3 months, anything. What should be my ideal approach for entry? So suppose there is a stock which is in a very good downtrend. Say this downtrend started in 2021 and price is continuously going down slow and steady. I'm not talking about a rally. I'm not talking about a crash. Crash is when there is a very big fall, 50-40% in just one momentum. I'm talking about a downtrend, slow and steady movement of the price below. 2021. After 2021, in 2022, what we see, price has become sideways. And in 2023, what we have started to see, price has started to make something like this. So this is the point where we should invest. And how should we say that, okay, from here, it will not again fall like this? For this, we have some symptoms. So what happens when we go to a doctor? He asks us, what are your symptoms? I have cold, I have fever. So then he gives a test and then the tests confirm, okay, you are having XYZ disease. So similarly here also, we look into some symptoms and signals, which tells us that now is the highest probability that the trend will change. So we look into the symptoms and then we see there was a sideways phase, a downward phase. Then there was a good sideways phase. Now either it can make like this or it can go like this. There is only two options, either this or this, because this phase number 1 and phase number 2 is already done. Yes, it might happen that it can continue for some more time. That can happen. But ultimately, again, it will go here or here because the market cycle is like that. So after these two phases, when we start to see the stock forming like this, we know that this pattern is for an uptrend. Then we can say, okay, this is the point where we should buy. This is the point where should we buy. And now the most important thing, where should we exit? So we exit only in two reasons. Either we get our target means a very good profit, or we exit bearing some loss, which is called our stop loss. What is a stop loss? Stop loss is a point beyond which we do not want to give a loss. Say I have entered into a trade or an investing. I have invested say 1 lakh capital. And I have planned that either I will exit if I make 2 lakhs or I will exit if my 1 lakh is eroded and only 80k is left, which means 20k loss. I will not wait for my 1 lakh to become zero. I have decided that if I go into 20k loss, I will simply save my 80k. This is called stop loss. So when I invest here, I know that if this is an uptrend, it should continue from here. It should not again come and break this point, right? Again, if I draw it, say if this is a downtrend, this is a sideways trend, and then the trend is starting to change. Suppose this has happened. If you are investing here, then you are a fool. Why you are a fool? Because already this has gone. Suppose this was a price of 100 rupees. It came down to 50 and now it is again at 100. And this is 70 rupees. So you have to invest somewhere here. Once from 50 to 100 it is gone, your train has left the station. You cannot jump into a running train. So you cannot be too late also. What is the area where we can enter? After this sideways phase, suppose the pattern has started to form like this. So we can say, if I enter here, then my assumption is it should continue like this. The moment it breaks and goes below this point, I will exit here. I will give my loss, whatever the loss is, and I will exit. Because I know if this has to go to an uptrend, it will keep continuing from here. And everything in stock market is probability. Nothing is 100% confirmed. And what is probability? 8 out of 10 times or 7 out of 10 times, we have seen in the past that after this downtrend and sideways trend, if this has started to form, it goes up. 8 of the 10 times we have seen this. So that is why we are confident on this visualization. We need to visualize this. Calculation is the later part. So if I again go back to my chart, and if I start to open any stock, say some pharma stock, you can say Biocon. Biocon is a pharmaceutical company. Let me open it here. And if I go to a monthly chart, smaller duration, or if you want me to go to say weekly, fine. And if I go back somewhere, yeah, fine, here itself we can do that. Let me just zoom it, if you can see it much better. So simply if I try to visualize from my eyes, this area I can simply say neither upside, neither downside. This is totally fixed somewhere. After that, I can see a clear-cut downtrend. How I can see a downtrend? Here is a fall. It rises a bit, it falls, rises a bit, it falls. After this, suppose you ignore this part. Do not look into this part. Simply ignore this. Or let me just cut it. I'll cut it here. Where is that? I'll just cut this part. So say this is the current position. This is the current scenario. Let us assume. So after this downtrend, we are at this point. What
Okay,
should
Nagaraj has raised his hand. Akash, sorry to interrupt.
Yes, sure.
Yeah, Akash, so I have a query here. So we are saying the sideways, right? So even in sideways, we have uptrend and downtrend. So how to exactly consider the portion, whether that is sideways or even in that sideways, we have uptrend and downtrends.
Yeah,
so
correct.
If you zoom in, zoom out, so actually the sideways will become uptrend and downward.
So yeah, sure. You have a valid point. So if you say this is a sideways, and here you can see uptrends and downtrends also. So this is what I was talking about. Suppose I say this is my sideways. So here, where can we see an uptrend? This is a rally. This is not an uptrend. What I said, this is rally and this is an uptrend. Slow and steady. This is again a rally. Here, if we see a downtrend, yeah, I can see one downtrend, something like this, a very small downtrend. If I want to see here, this downtrend has started. This is the second phase. So what should we do here to avoid this confusion that it can happen, then this can continue? Just because this has already happened in the chart, it is very easy that I have said that, okay, you can see this is a sideways. But if we are in a live market, every time it starts to form an uptrend, we will think that, okay, now it will go up. This is the point. So for this, what we do multi-time frame analysis. Multi-time frame analysis. So all this time, we are into only one time frame. This is weekly. You can see W. All these candles are weekly. In monthly,
Yeah.
Yes.
What is a good one to take the time frame? It's like 6
Every
months. or 1 year duration or monthly duration or how it is?
Every time frame is good. It totally depends upon your expectations. Do you want smaller returns for small time period? Do you want bigger returns for a bigger time period? Based on that, your time frame of analysis depends, and your trade and your waiting period also depends. So suppose I want only 1% return on my capital in 1 hour. So I will look into 5-minute chart, 1-minute chart, and 1 hour chart. That's it. Suppose I want 50% returns in 1 year or 2 years. Then I will not look into 5-minute, 10-minute chart. Then I will go into monthly, quarterly, weekly charts like this. So concept is same, logic is same, pattern is same, everything is same. Only based on our expectations of returns and time, the time frame changes. So in multi-time frame, what we do? In multi-time frame, we generally consider 3 different time frames. 3 time frames. Say quarterly, monthly, and weekly. So we try to understand what the price is doing on a quarterly basis. Then we go deep into, we break this quarter into month. So when we break 1 quarter into month, how many months we will get? We will get 3 months.
Akash, just a second. Nagaraj says he is not able to listen to you. Are you on mute? No.
No, I'm not on mute.
Akash, can you hear me? Just a
Is
second.
his-
I've asked him to unmute. I am able to hear you.
Yeah,
Nagaraj, can you hear now?
is he muted?
I asked him to unmute now. Sorry, guys. Please hold on. Yep. I think problem might be his side. I can listen to you. You can continue.
Yeah, so is he back?
He says he wants to rejoin.
Sure, no worries. So what I was speaking is that suppose we are looking into a quarterly time frame. So when we break 1 quarter, we get how many months? We get 3 months. Again, when we break 1 month, we get 4 weeks. So in multi-time frame analysis, what we do, we consider 2 to 3 different time frames, and then we see that on a broader picture what is happening, inside that what is happening. So if someone says that how was your day, how would you sum up your day? I will say my morning was okayish, my afternoon was very bad, but in the evening it was again very good. So overall it is good. So this is how we do multi-time frame analysis, and then we try to understand that okay, what should be the entry point, what should be the exit point. We will come to that in later on. When we go more deep into it, we'll come into that multi-time frame analysis also. That is the last part of whatever we are trying to learn. Here what we are trying to learn is simply try to understand the market cycle at first, and then we will deep dive into it. So this is sideways. Then we are having a downtrend. So now I want all of you guys to visualize something. What you want to visualize is that, let me keep it here. You see a fall, a halt, a fall, halt and a fall, halt and a fall. Again, there is a halt. So based on this, what should happen next is my question. So now into this question, my another question is, what should happen if this has to continue its downtrend? My question is this. So if it has to continue to the downtrend, it should again go down because it is making a pattern something like this.
We should see the L1, previous L1.
Yeah, exactly. So this point should be broken and again it should go down, because after falling, this was the area, this point broke, again this was formed, it went up, again this broke, it came down, again it went up, again this broke. Now again it is in such a point, if it has to continue its downtrend, this should be broken, right? If this is not broken, what should happen next? it should go in a sideways phase. And then we will see what happens. So we'll wait for few candles. We'll see what is happening. So now, after this downtrend, what we see, this was not broken. So this was our discussion based on the lows. The lows were getting broken. Also, the highs were not getting broken. Highs were not getting broken. This is the first time I am talking about the symptoms. This is the first time when this low was not broken, but this high is getting challenged. This was the highest point. It broke. Again, this was the next highest point. This could not reach here. This could not reach here. But this is the first time when this price is trying to reach its high. So what we can say, what are the symptoms of the disease? The symptoms are low is not getting broken and the highs are getting threatened, which means this downtrend is getting weak. We cannot say it has ended. We can say this is getting weak because the pattern now it is violating the rules of downtrend. But for an uptrend, what do you want to see? You want to see something like this. Try to visualize in your mind. Try to draw it. You want to see something like this. Something like this you want to see being formed. Forget about entry and exit. Just try to visualize this. So we'll see what does it form. This. After this candle, what is our assumption? After this candle, it should again move like this. So it can happen, it should move immediately, or it can happen, it can go 2-3 candles more down and then go up. In any case, please mark my words, in any case, this point should not get broken because in an uptrend, we know the lower points does not get broken. So be it 1 candle or 50 candles, be it 50 candles here, but this point should not get broken. It should move like this. This is how we visualize in our mind. Now we'll see what is happening. You see? So after this is forming, it might have happened that these 2 candles should come after few more days. I mean, there should be red, few more red, and then it can go up. So this is not in our control. Please mark my words. This is not in our control that how many candles we should wait. It can be any number of candles. But we know the bigger picture that whatever be the candles, this point should not get broken if it has to go to an uptrend. So what we have in our control, we will use that. So, sorry, what is this? Just a second. So now we see after a downtrend, this was a momentarily sideways phase. Low did not get broken. And now it has started to form something like this. So here we can say that since this is formed, it should go up. Again, it should make something like this. These lows should not be broken. So now if we enter here, say 263 price, what should be our logical exit price? Either target or our stop loss. So we always plan our stop loss first. Risk is first, reward is later. Priority is always the risk. So we clearly know logically, whatever be the news, whatever be Ukraine war, anything, price should not go below this. So if I am entering at 263, my Lakshman Rekha is this 210. The moment price goes below 210, I will exit because there is no emotions, there is no hope, there is no word called hope. Everything is analysis. We know that in an uptrend, this should continue. The moment it breaks like this, we know this pattern is not an uptrend. So we should exit without any emotions. So we will enter here and we will keep our risk here. What about the target? That we will discuss later on. How do we set our targets? Everyone wants that if I invest 100 rupees, At least if my risk is 100, I should get a reward of 100, 1:1 ratio. So a healthy ratio is, which is a standard across the stock market industry, is 1:2, which means that if I am entering at 263, my risk is as 210. So how many rupees is my risk? My risk is 53 rupees. So at least I should get 53 as my reward minimum. And ideally it should be the double of your risk. Ideally it should be, if your risk is 53, your reward should be 106 rupees. Ideally. We'll come to the calculation part later on. First we'll try to visualize everything. We'll see how the candles are forming, how we visualize. So now, again, what we see after this, we had a pattern something like this. Again, it is trying to make something like this. So this should not get broken. It should move from here itself. The lower lows should not be broken. So at this point, now my question is, see how the psychology works. How do we trade? At this point, if someone asks you that, suggest me that if I enter into Biocon, if I buy Biocon, what should be my risk? If someone asks you, what would you say? You would say that since it is forming an uptrend like this, from here, it should move upside. This candle should make something like this. You need to visualize that in your head, in your mind. The moment it makes a red candle, something like this uptrend is broken. The pattern is not the same. So we know it should not go below this. So anyone entering here should put his risk somewhere below this point. Now again, if someone wants to be ultra safe, I want to be ultra safe, then he is free to put his risk here also, which is the safest point. This point is the safest point to keep your risk. And this is an aggressive point. Aggressive means you are very optimistic that price should continue from here. Market is dynamic, anything can happen. It can happen that it can make a red candle like this. This is a red candle, say, and then it can make a green candle and then it can move up like this. It can happen. Anything can happen. But we are the ones who decide our risk. So either we enter at 258 and keep our risk at 240. 18 rupees risk. Either we keep this or we enter at 258 and keep our risk at 210. We keep 38 rupees risk. So how much risk we keep, that is up to us. What is our risk appetite? But the logic always remains the same. Now we'll see what happens next. We'll see. So now when you see this kind of a candle, our confidence builds up. We know that it should continue. We'll see. So the pattern is continuing. Fine. We'll see what happens next. Let it go. So at this point, again, if someone wants to visualize, how should the candles form to go up, to go down, or sideways? Only 3 points. We'll again visualize. Let me draw it properly. We were seeing something like this, and now what should happen? In any case, this area should not get broken. This one. This area should not get broken. It can come down till this much also, but again it should go up. But this area should not be broken. This is my logical area. These lowest points should not be broken. If it has to go up, we will see. So now at this point, if someone wants to enter again if someone wants to trade, there can be 2 scenarios. First scenario is this same logic, what we were using. So from here, it should just move up. What should it form? It should form a candle like this. This point should not be broken. Why? Because we want this kind of a pattern. This is first logic. Second logic is we should not trade it altogether. Why we should not trade it? because already price has gone from 220 from this point, already it has gone to 294, 300. 80 rupees price has already gone up in this trend, which means how much percentage of 220? Almost 40% stock is up. So the train has already gone. These were the areas where we took good trades. Now the market is stretched. We say it is stretched. Stretched means already price has gone up. We should not show interest. Instead, we should find some other stocks where this kind of a scenario is just happening. This is how we think, traders think. So some traders might think I won't enter. Some traders or investors might think I will enter here, but I will put my loss here itself at 280, because I know if it has to move up from here itself, it will move up. It will not go down. From here itself, it will go up if it has to move up. So we'll see what happens next. Let's continue. Fine, it moved up, but it came down. We know very well this is the area. This should not get broken if it has to move up. It got broken. So the traders who thought that it is already stretched, they were saved. And the traders who thought that I will trade aggressively, this is my loss, they will exit, giving a small loss. So all the price movements happen due to traders thinking only, and investors, both of them. And this is the, you would have heard this word multiple times, buy on dips. It is a good stock, buy on dips. So the logic is this only. Stock rose, this one is the dip, this one is the dip. And people say buy on dips, again it will go up, coming down, buy on dips. So this is the general word, buy on dips, but the logic is this itself. Now what happens? They do not teach which dip to buy. We need to buy the dip in uptrend, not in the downtrend. But what we do, we are innocent people. We do not have total knowledge of the market. What happens? When market dips here, we buy here. Again it goes up, we are happy. We are getting some profit. Again market dips, we buy again here. We do averaging. Again market goes up, it dips, we again do averaging. So this dip we do not need to buy in the downtrend. We need to buy the uptrend dip. This thing no one teaches properly, or no one explains that what is the logic behind these things. In money control, you will always find buy ICICI Bank, buy on dips. But they won't tell you that which dip, what is the logic. And that's why people keep on averaging when the price goes down, and their money is stuck for years and years, they gain nothing. And the moment they exit, you see, all the innocent traders, they will buy these dips. They will waste this much of their time. And then after losing their time, they will exit with frustration. And the moment they will exit, this uptrend will start and they will bang their heads. Oh my God, when I was buying the dips, price was not going. The moment I exited, price is shooting up. The market is my enemy. The market is not your enemy. The problem is that we are not properly educated. People don't teach us what are the rules of the market. And that is why this is happening with us. Market is neutral. It has no enmity or friendship with anyone. We should try to know it, what it is. So I will not go much deeper, though there is much more things to add here. I will just sum up today what we learned in a nutshell. We understood what a trend is, up, down, and a sideways trend. Higher highs, lower lows, lower highs, lower lows. What is a market cycle? After an uptrend, there is a sideways and a downways. How we should plan our entry and exit. This is just a general talk, how we plan our entry and exits. There is much more detailing into it, preciseness into it. That precision and detailing, we will come into that. In the next webinar, we will again go back to our candlesticks. So I would request everyone to please join the next webinar next week, and also brief yourself about the candlesticks, the 7 candlesticks that we had discussed. Someone has, if missed out, please ping Karthik ji. I have some documents also. We can go through that and understand the candlesticks. We will again go back to the candlesticks and learn some patterns there, and then again come back to this trend part. We will try to relate it. One more thing I would like to show you. Let me see if I find that. Let me open any stock. So any specific stock you want to discuss based on these trends?
Now HDFC is on the news. So
Fine. We will go to HDFC Bank. So I will first talk about investing. People who want to invest in HDFC Bank for long periods. So if I go to say quarterly, I will not go to yearly, I will go to quarterly. So each of this candle is a quarterly candle, three months candle. So we can see from 2013 a good movement, a halt, again a movement, a halt, movement and a halt. Halt means that that dip. Then this was the COVID period, there was a dip, again dip, and going like this. So when there is a rally, never invest in a rally. Always invest when you see a slow and steady uptrend movement, say 45 to 60 degree. So if I draw a protractor here, this is my 90 degree, this is my for the 45 to 60 degree, something like this. So any stock which is moving in an uptrend long term in this, it is good for investing, not bad. But you need to know your stop losses. What is your stop losses? So in HDFC Bank, what was the best point to invest? The best point to invest was here itself. Why I am telling here itself? Because after this, it came down. So you can say this was one low, and when it was starting to go up somewhere here, you need to visualize in your brains. Try to make this candle. I'll just make it easy for you guys. Let me just cut it. Why it's not working? Yeah. Say HDFC Bank is somewhere here in quarterly. This is which candle? This is July 2022. So I'm talking 1 year back. So say 1 year back, this is the figure or drawing what we can see. So it can happen that it can either go up from here, or it can make a downtrend, or it can be sideways. These three can happen. Now let's see. So this is October 2022. Still not, I am not that much confident that whatever can happen, anything can happen. So my first symptom is, see this point, this is the highest point of previous quarter. When I do multi-time frame analysis, from quarterly, I also check in daily and weekly also how the candles are forming. We will come to that, we will learn that. But for now, simple, my assumption is that the moment previous month's highest point is taken out, I can see a high probability that it can continue. This should not break. We will learn that. We will come to that. Don't worry. So here, so this was the moment where I would have entered for long-term investing. Say 1600 price. And my stop loss will be strictly this one. Say 1300. 1300 will be my stop loss, because I know from here it should move. It should not go down below this. So now you see this is a quarterly time frame. You are investing for long term. So you cannot expect returns the very next day or the very next month. You need to wait for 4 quarters, 5 quarters. So what is the meaning of 4 or 5 quarters? 1 quarter is 3 months. So 4, 5 quarters means 1.5, 2 years, 3 years. So after that, if I go on, it is forming something like this. So this is the current scenario. So what we can say in this current scenario, again we try to visualize in our mind. Visualization will lead us to expectations. How do we expect? So from here what we expect, first expectation is this low should not be broken in 1300 rupees. HDFC should not fall below 1300 if it has to go up. Number one. Number two, we do not know the next candle will form like this, or maybe few more candles, and then it will go like this. So we have to give time. We have to be patient. It might happen that this candle becomes totally red. It might happen. Totally red. And then a green candle is formed and then it goes up. It can happen. This low will be saved. It will take some time. It will go up. Or it might happen immediately the next quarter it will go up. This is not in our hands. What is in our hand? We know this is our stop loss 1300. And we know from here it can go up. Now if someone wants to invest here in 1644, he should know that he has a risk of 344 rupees. Likewise, he has to plan his quantity. How much quantity should I buy? Because per quantity my risk is 344. So say I buy 10 quantity of HDFC Bank. So my risk becomes 3440. If I buy 100 quantity, my risk becomes this. 1000 quantity, my risk becomes this. So based on this, our risk is defined. Now, at this moment, if I go to daily candle, daily means every day, per day candle, or say weekly. What do we see in weekly? How do we visualize this chart in weekly? In weekly, we can say there was a rally. This is not a trend, this is a rally. And then totally sideways. Tried to make a downtrend, but still totally sideways. Again a rally, again a sideways. But if I make a total picture, this is totally a sideways market. If I make a box from here to here, it is fixed in a box. I cannot see any trend. How should I decide in daily time frame or weekly time frame that HDFC Bank will go up or down? From here, let's visualize from here. This is a sideways market. Now see, this week is already gone. The previous week, today is Saturday, previous week gone. So on Monday will be a new week. So now try to close your eyes. First, look into this sideways figure. Print this into your mind and then try to visualize. Suppose the next week, the candle makes something like this, green. Then how will you visualize? What you see, this is the first part of my uptrend. And then you know this should not get broken. From here, it should continue like this. If it has to go up, which means you are visualizing something like this, right? And if it has to go down, simply the next week it will fall, it will make a red candle like this. So what is your criteria for an uptrend? Today's week should not be broken the next week, which means this point is very crucial for me. The next week, whatever candle you should make, green, red, whatever, this point should not be broken. The candle has to be somewhere between this. We will wait. We will have patience and we will let the candle form. We will not rush into it. We will let the candle form. After this, when we see something like this, then we can say, yes, now it has started to make sense. And that will be the point where we can take an entry for HDFC Bank. And then we can set our target, which is a total different topic of discussion. We'll go into multi-time frame also. This is weekly. We'll go into daily, and in daily also we will check what we can do, what we cannot do. We'll come to that. Everything will come. What are the candle sizes in an uptrend? So in any uptrend, when you see big green candles, you need to understand it is a good uptrend. And in any uptrend, when you see small green candles, it is not powerful. Price is going up. I agree, price is going up. But you see these green candles, they are so small green candles, not powerful. I want powerful, strong green candles in an uptrend, something like this. These powerful, strong candles. So I am not having faith here. Suppose the next week I see a strong green candle, something like this. Then I can say, okay, now this has formed. This should not get broken. From here itself, it will go up. We will look into more examples. The next webinar, we will go into candlesticks. And after that, we will go more deeply into multi-time frame and more different analysis. Okay. So any doubts? or any more questions on this? Anything, if you are still having confusion?
No, Akash, it's very informative.
To ask.
So that is why those buy dips and everything, and simply, be it trading, be it investing, be it mutual funds, whatever it is, the trade or the investment, what you are doing, everything should already be played in your mind. Whatever I have already played in my mind, I already know the outcome. I have played in my mind that next week, if HDFC Bank makes a big green candle like this, I am playing that everything in my mind. I am visualizing that green candle. Then I know this should not get broken. From here itself, it should go up. So I have already visualized that. And if that is happening, I will simply trade. I already know what should be the outcome. It should go up, or if it goes below, I'll just exit here. So I will never be taken aback, or I will never fear from any news or anything. Everything, any news, everything is factored in the chart itself. Adani Enterprises, right? The crash that happened. I will tell you. So, if you see here, Adani Enterprises, let me go to quarterly also, or maybe monthly also. Okay, quarterly is fine. So these candles are quarterly candles. You see, from 2007 to 2021, for 13 years, there was no movement in the stock. I am not talking about news. There was no movement in the stock. All of a sudden, there was an outburst. You see this big rally, only single halt, and this. If you draw a 90-degree protector like this, you can see almost this angle is equal to more than 70 degree, almost near to 90 degree. So these kind of a trend is never sustainable. It is not sustainable. And what is the logic? Everything has a logic. Say you yourself, you have bought at 400 rupees. And within 1 year, you see from 400 to 4,000, you will go mad. You will go berserk. That I have gained so much. I have gained 1,000%. What you will do? You will start to exit. You will book your profit. And the moment you exit, there are many like-minded people like you who will also exit, seeing you, and price will fall. So that is why people will say there was news in Adani scam and this crash happened. I say I do not know anything about news. I know that this type of an angle is never sustainable. My analysis says. So I will never invest in Adani at this point itself. Never ever. And ITC, there are so many of my friends who have benefited from ITC. And they have gained so much. Someone has bought car and whatever not. You see the movement of ITC here. This is again quarterly only. Compare this to the visuals of the Adani chart. See, so slow and steady it is going. Even if I draw a 90 degree, you see 45 degree here. This was the COVID period. In COVID, it came down. And now you see, this is again too much. This is not good. So if someone says that ITC, now it is not a good time to invest in ITC. If someone is in profit, I would suggest book your profit and go out. You will again get an opportunity. So if this is what you can see, I think again it will come down till 300. Not at once, slow and steady, but it will come down to 300 again. So if someone is having position in ITC, book your profits. Be patient, wait for 300. You will again get a very good entry in 300. Okay, any more doubts? Okay, it's completely fine. So today that will be it. If someone wants to ask any question or share anything or any recap, do let me know. I'll give you 5 minutes, or else we'll wind up.
Akash, you can stop recording as of now.
Sure.
And don't exit
cannot-
Zoom. It will some time. It will take some